What's going on YouTube? Crypto Matrix here, coming at you with another cryptocurrency stream. So today guys, I've had a lot of requests from students to do candlestick videos and the basics, because it's something that really helped people early stages learning about candlesticks and just how to read what they're looking at. So I'm going to go over candlesticks today. So guys, be sure to subscribe and like, and guys, I'm going to dive right into learning candlesticks, okay? So remember, T, A, and E, the trend, the area of value, and the entry. With the trend, if the candles are above the 200 MA, then it is most likely bullish, okay? If the candles are below the 200 MA, then it is likely bearish. With the area of value, you need to find the moving average, the support and resistance, the trend line, and the channel. Okay, those are four very important things you need to find in order to find your entry, okay? An entry will be candlestick patterns. And we're going to go over those today, guys. That's what we're going to be learning today. So guys, here's the basics on candles, okay? You start with the body, and whether it's green or red, meaning it's bullish or bearish. All bodies have wicks, the low and the high, for both bullish and bearish, the high and the low over here. The only difference between them is the open and the close. The open is down here for the bullish candle, the close up here. For the bearish candle, the open up here and the close down here. Remember those arrows, a bullish going up, bearish going down. Okay, guys? How to trade candlestick patterns. So the candles show you who is in control at the current time. So whether it's bullish or bearish, the color will indicate which way it's moving. So keep close attention to the body, the wick, and the body relative to the wick. So how big the wick is, how big the body is. Pay attention to the open and the close of the candle, and if the candle is bullish or bearish. Okay guys, so notice where the candle opens and closes. Okay, if it's higher or lower than it previously was. Always notice the highs and the lows for the current selection. So the top and the bottom, basically, the top of the wick and the bottom of the wick. Keep an eye on the trend, and if it's above or below the 200 moving average. Watch the support and resistance for the current trend. Okay guys, it's very important to know those, because then you know where the tops and bottoms can be, if on a new candle. Look for entry triggers to enter your trade. So guys, that'll be different candle triggers, okay? So entries that we're going to be looking for today, and that's what we're learning about today. There's different kinds of entries you should be looking for and triggers to enter your trade after analyzing all the other things. So how to read candlestick patterns. So when you see a giant wick like this and a green body at the top, that means a rejection of lower prices. That means the price went all the way, it opened right here, but then went all the way down and then back up and closed all the way up here. Here we have indecision in the market, meaning there's no body. The price opened here and all the way up, all the way down, but then closed right where it opened. That's called a doji. Over here we have the exact opposite of a rejection of lower prices. We have a rejection of higher prices. We had it open right here, price went all the way down here, all the way up, then it came all the way back down and closed. Okay, so a rejection of higher prices. Okay, so remember, on a red candle it opens up top, whereas on the green candle it opens at the bottom of the body. Okay, that just means it went all the way down, and over here went all the way up, but still closed here and here. So the first one I wanted to go over today was an engulfing pattern. Okay guys, so we have a big bearish body right here, wicks on both sides, and then a big bullish candle which is engulfing the bearish candle, meaning that there's more bullish action now on the new time frame, and it's engulfing the bearish candles. This is a bullish engulfing pattern. Okay, that's a very bullish sign. Here is a bearish engulfing pattern. Okay, we have the big bullish candle right here, and then an even bigger bearish candle engulfing the bullish candle, meaning that this is a bearish trend, so a bearish engulfing pattern. This is a negative sign. Here are some examples of bullish and bearish engulfing. So right here you see the bearish candle being engulfed by the bullish channel and then a price rise up. Again, a bearish candle being engulfed by the bullish candle and then a price rise up. Okay guys, that's a bullish engulfing right there. Here is an example of a bearish engulfing. Okay, so we have the small bullish candle and then a larger bearish candle engulfing the bullish candle and then subsequently a drop off right after. Okay guys, so keep in mind for that when you're looking. Guys, this is the graph from this year, so this is from March on. So guys, this is actually from this year, so if you would have noticed all this stuff this year, you would have been able to make these good calls. Hammer and shooting star. So this is a hammer right here, and it looks like a hammer. And this is a rejection of lower prices. We went over this. So an open right here, the price goes all the way down, then shoots all the way back up, and then closes right here. Okay? And then over here, just the opposite. The price opens up here, went all the way up, but then closed down here, and that's a rejection of higher prices, and that's a shooting star. So this is also a bearish sign right here. This is a bullish sign. This is a bearish sign. So hammer is bullish, shooting star is bearish. Okay? Here's an example of a hammer. Okay? Right in March when we had this big drop off. Okay? There's your hammer right there, and then there's a price rise right out of it. That's an excellent example of a hammer, guys. Let's move along. Morning and evening star. So with the morning star, which is a very bullish pattern, we have a bearish candle. Okay, so an open up here, a close down here. Indecision in the market with the Doji means it opened here, price went all the way down here, went all the way up, and then came back down and closed right where it opened. An open down here, and then a close up top, meaning a reversal. Okay, so a bullish reversal pattern. That means the price came down, bounced, and went like that, okay? And over here, the exact opposite. This is an evening star. Okay? We had an open right here, price went down here, went all the way up here, but closed right there. Over here to a Doji, indecision in the market, price went all the way down, went all the way up, and then closed right here. And then again, an open on the bearish candle, price went up, but then all the way down, and then closed down here, so showing a reversal pattern almost. It is the exact opposite of the morning star. Okay guys, so that's a very bearish reversal pattern right there. And here's an example of a morning star on the recent time frame. Okay, so a large bearish candle, an indecision Doji, and then a big bullish candle, okay, and then a price rise right out of it. So if you guys look for these triggers, they're right there for you to see. You just have to watch for them and figure out everything that you need to figure out, okay? You got to remember the T, the A, and the E, okay? Tweezer bottom and top. Okay, so we have an open up here, price went all the way down, and then closed right here. So that's a rejection of lower prices. Opened right here, price went all the way down again, but then closed up top. Okay, so that's a double rejection, 2 times rejection of lower prices. This is a very strong bullish pattern. This is very strong. It means rejected prices happen twice. And over here, the exact opposite. We have higher prices being rejected. They open down here, the close up here, price went all the way up, it closed right there. Okay, price opened up here, price went all the way up again, but rejected and then closed even lower. So this is a double rejection of higher prices. This is a very bearish pattern. And this would be a tweezer top, and this would be a tweezer bottom. Okay, guys? Here's an example of a tweezer bottom. Okay, so we have a bearish candle right here. Okay, a wick going all the way down. Okay, and then a bullish candle, wick going all the way down, a rejection of lower prices again, and then a close up top. And then right after, we get a price movement upwards. Okay, guys, so that's a bullish sign right there. Gravestone and Dragonfly Doji. Okay, guys, this means that it opened up right down here, went all the way up here, came all the way back down and closed right where it opened. And this is a rejection of higher prices. A Gravestone Doji. Over here, we have the exact opposite, okay? The price opened up here, went all the way down here, came all the way back up, and closed right where it opened up here. This is a rejection of lower prices, meaning it opened up here, went all the way down, and came back up and closed in the same spot. That's a Dragonfly Doji. So guys, to recap what we went over today, T, A, and E, the trend, the area of value, and the entry, those are your most important things, guys. And I think one of the most important things in the area of value to find out is your support and resistance lines and your channel. Those are the most important things, because then you know exactly where it's going. The trend is right there too, but like the channel is, you know exactly where it's going. The supports and resistances are lined up, and that's how you see your entries clearly, because you know which way it's moving. You know where your supports and resistance are. That's how you know exactly how to get into the market. And then the entries come out and just pop out to you when you know what you're looking for, and then you know when to enter the market. It's that simple, guys. And then we just went over useful candlestick patterns. We went over the engulfing pattern, the shooting star, the hammer, the doji, the tweezer, and the morning and evening star. And guys, those are some basic candlestick patterns which will hopefully help you get in the market a little bit better and make better trades. And guys, if you haven't checked out my channel yet, be sure to do so. I'm getting subscribers every single day and just having a lot of fun. And guys, I'm making good money on my trades, and I'm really loving the YouTube page. I'm up to 111 subscribers now. I was at 100 yesterday, so I got 10 in the last day. It's just been a great time, guys. So thank you for all your support. I feel like I'm really moving along here. And I'm going to do more instructional videos on candlesticks, guys. That's something that's been a request from my students. And I think you guys will benefit a lot from that too. Be sure to subscribe and like, guys. I am Crypto Matrix. I'll catch you guys later.